Good morning, everyone, and welcome to this morning's webinar. I'm just getting myself set up here. Okay, so thank you for joining us today. As you can see, we've already performed a sound check, so hopefully you can hear us okay. If not, maybe try and turn up the volume on your or phone handset. The main thing showing on your screen should be my PowerPoint slide. You should also have a control panel like the one showing in this slide. This shows where you can enter questions. We will deal with questions at the end of the presentation. The webinar has been recorded and you will receive a link to the recording by email. So we should be ready to start now. Okay, as you probably know, my name is Paul Byrne and I'm the Managing Director here at Source Software. I'm a chartered accountant and have spent many years in practice, most of those at partner level. I've also been a nerd and was fortunate to turn a hobby into a business over 20 years ago. Software development is now my full-time occupation. I look after our products to Source Payroll Manager and to Source Accounts. I'm very fortunate to have really good people working here, and their intricate knowledge of payroll-related issues has long since surpassed my own. Two of them, Audrey and Vicky, are joining me today. So I think what we'll do at this stage is I'll hand you over to Audrey for the budget overview. We will then have a discussion on what Revenue have called PAYE Modernisation, which is basically real-time information, that the HMRC equivalent of RTI, which is due to come in January 2019. And then we'll have a question and answer session. So I'll just pass you over to Audrey to go through the main points of the budget.
Good morning, everyone. I suppose we've had more exciting budgets. There wasn't a huge amount, but we'll just go through the payroll-related budget changes just from a result of Budget 17. So there was no changes to the PAYE rates, also no changes to the cut-off points and credits which apply under the emergency basis of tax. So no changes to tax rates or the rules, I suppose, for the emergency basis of tax. Emergency USC will continue at a rate of 8%. The USC bands for 2017, I suppose, are generally the same as 16, the only exception being the second threshold, which has increased from 18,668 euros, which was 359 euros per week, to 18,772 euros, which is 361 euros per week. So just a €2 per week change there to the second threshold. The basis for this is that somebody earning the new minimum wage of $9.25 per hour can work a 39-hour week without going past the 2.5% band into the 5% band. Okay. So you can just see the thresholds on your screen there. So we still have the annual threshold for the first rate of 12,012 euros. The second one then, as we said, has changed slightly, which has gone up to 18,772. And then we have the 70,044 euros. Okay. So you can see now the rates on your screen there for 2017 and 16. So the three lower rates of USC have been reduced by 0.5%. The higher rate of 8% remains unchanged. So we now have a 0.5%, 2.5%, 5% and an 8%. We performed some USC calculations on two salary payments just to show the difference in USC. An employee earning 80,000 will pay approximately 352 euros less USC in the tax year, so comparing 2016 to 2017. And an employee earning 35,000 will pay approximately 177 euros less USC per tax year with the revised rates. Okay. Okay, so there was no change to the threshold for USC. So the exemption, remains at 13,000. So individuals whose income does not exceed 13,000 remain exempt from USC. Revenue include this exemption, where it's applicable on the P2C file. And if Revenue are not aware that an employee's earnings are below the annual threshold for USC, it is up to the employee to contact Revenue and inform them. And where they do that, a new P2C file or revised file will be issued, and any USC that the employee has paid to date in the tax year will be refunded. It is important that employees only contact revenue when they are certain their earnings will not exceed the threshold, because if they are marked as exempt and their earnings exceed the 13,000, all earnings will be subject to USC. Okay, so it's better to err on the side of caution. If they're not sure, they can always apply for a P21, balancing statement the following year, and if they are under the threshold, they would receive any, payment, any pay to USC back. So just always err on the side of caution. And employers should never deviate from revenue's instructions. So, if an employee comes to say that their earnings are under the threshold, it is very important that you point them to revenue, that you don't make the change yourself. Okay. All Department of Social Protection payments, including community employment earnings, are exempt from USC. There is a difference between an employee, USC exempt status and employees in receipt of USC exempt income. Okay, so as we said, like the community employment earnings are exempt from USC. That doesn't necessarily mean that the employee would have USC exempt status. So there is a difference there. Okay. So just to talk then, Revenue will issue the 2017 P2C files in December 2016, but they have issued guidance to cover circumstances where a P2C file has not been received in time for the first payroll run in 2017. So, in relation to the imports from 16 to 17, the software will automatically apply those correct rules. So where there is a 2016 P2C file, the 2016 USC cutoff points are used along with the 2017 rates. So the software will automatically handle that for you on import. But if an employee commences employment in 2017, a 2016 P45, again, the cutoff points for 2016 would be used along with the 2017 rates, and this is on the temporary basis until the P2C file is received. So in that instance, you would enter the 2016 USC cutoff points with the 2017 rates when setting up the new employee.
I guess just to interject there, Audrey, I suppose Revenue generally will try and issue the P2C files before the middle of December.
Yeah, I think last year was the 9th of December.
Yeah, so everybody really should have the P2C files to import well in time for the start of 2017.
Hopefully. Okay, so just to speak about PRSI, there were no PRSI changes in the budget. The PRSI credit that was introduced in budget 2016 remains in place. As the PRSI credit is relatively new, we might just take this opportunity to recap on it. So the credit applies to weekly earnings between €352 and €424, and the maximum weekly PRSI credit is €12. Okay, so just to look at the example here, it is obviously automated within the software, but just in case you're ever asked about it. So the first thing you would do would be to calculate the PRSI credit that the employee is due. So as we said, the maximum PRSI credit is €12. The €12 is reduced by 1/6 of earnings in excess of €352.01. So in our example here, we have an employee with gross earnings of €370. So we would take the 352.01 from the €370, which gives us €17.99, and that is reduced by 1/6, so that gives us €3. So the €3 then is taken off the maximum credit of €12 to give a revised or credit due of €9. So the next step then would be to calculate the PRSI charge as normal, so it's the earnings at 4%. And lastly, then you deduct the reduced PRSI credit from the PRSI charge. So in this example, we have a weekly employee PRSI deduction of €580.
So thankfully, the software does that automatically. I still am amazed when I hear that there are people out there that actually still do their payroll manually. I can't imagine having to do that calculation every time. Anyway.
Funnily enough, we've had very few support calls on the PRSI credit. I think we've had, a handful for the whole year, which is surprising. With more fun programming and testing. Okay, so just to look at the pension-related deduction, or the PRD as it's often referred to, which is for the public sector employees. So from the 1st of January 2016, the PRD threshold was increased to €24,750, and a further increase to €28,750 from September 2016. To overcome issues caused by cumulative mid-year changes, in 2016 we had a blended threshold of €26,083, which applied from the 1st of January 2016. But for 2017 now we have the threshold of €28,750. So you can see just in the little table there, so up to €28,750 is exempt. From €28,750 up to €60,000 we have a 10% rate, and over €60,000 then it's 10.5%. Okay, so just to speak then about the minimum wage. So the minimum wage is increasing to $9.25 per hour from the 1st of January 2017. The increase wasn't really announced in the budget, but it is in the documentation. I think it's a bit of a surprise that it wasn't kind of a headline of its own. But the rate of $9.25 is for an experienced adult worker, which is an employee who has any kind of employment in any 2 years over the age of 18. So while we do say the minimum wage is $9.25, it is subject to it being an experienced adult worker. So an employee over 19 and less than 2 years since his first job, the rate of pay there would be $8.33, and over 18 and less than 1 year since began first job is $7.40, and aged under 18 then is €6.48. Okay, so that's from the 1st of January 2017. Okay, so just some other information then from the budget. The earned income credit, which was introduced in 2016 for the self-employed, will be increased by €400, and that will go from €550 up to €950. The home carer tax credit, so this is for somebody, I suppose, staying at home to mind the children. So the home carer tax credit increased by €100, so that's gone from €1,000 to €1,100. A new Fisher tax credit is being introduced for the years 2017 to 2021. So this tax credit is calculated at 20% of an individual's fishing income, subject to a maximum tax credit of €1,270. Okay, so tax credit changes are handled via the P2C file, so those amendments don't require any software changes, they would be just on the P2C file as issued by Revenue.
I suppose we were just talking about it earlier, the main software changes that I need to make are really just solely in relation to the USC changes, the reductions in the USC rates. Okay.
Okay. All weekly social welfare payments will increase by €5 per week from the 1st of March 2017, and this to bring them into line with the state pension increase. So this increase will apply to paternity, maternity and illness benefit payments. Okay. And as paternity benefit is a new payment available in respect of children born or adopted on or after the 1st of September 2016, just to, I suppose, talk briefly about the treatment of it. So paternity benefit is subject to PAYE, but is not liable to USC or PRSI. Similar to maternity benefit, Revenue tax paternity benefit by reducing an employee's tax credits and rate bands. So where an employee is receiving the paternity benefit directly into their own bank account, the employer simply imports the revised P2C file where the credits and cut-off points have been adjusted. And if the employee is not receiving any payment from the employer while out on paternity leave, the salary payment or hours would simply be put to zero. Just to mention, if the employer receives the paternity benefit into their bank account, then it does need to be paid back to the employer over to the employee as a non-taxable addition, because it has already been taxed by Revenue reducing the tax credits and cut-off points. Okay. The Home Renovation Incentive Scheme has been extended for a further 2 years, so this brings it up to the 31st of December 2018. Okay. And there was no change, so maybe this would be for our Thesaurus accounts users, no change to the 9% VAT rate for the tourism section 2017. And the flat rate addition, which applies to farmers who are not registered for VAT, will be increased from 5.2% to 5.4%.
Okay, thank you, Audrey. I suppose the other thing I just meant to say there in relation to change to the software, obviously I have to make the changes for the PRD band as well. I suppose my only comment really in terms of the budget would be that it probably is a bit of a missed opportunity. I feel myself that one of the biggest problems is that people enter the top rates at too low a level of income. So it's really a disincentive, I think, it's a disincentive to work. It's a disincentive to incentive itself. You know, I think it's one of the things that if they reduced the higher rates or even increased the thresholds before somebody entered those higher rates, they'd actually get more income as a result because there'd be more work. Even if, you know, even in terms of people having extra money to spend, that flows into the economy anyway, so they get it in terms of VAT or indirect taxes. So, you know, it's probably not very popular for any government to try and bring across the line, but I think it's something, when they're talking about Brexit proofing, you know, it's something that has to be addressed because, you know, if it's much more attractive for somebody to work in the UK because of tax rates, you know, that's what will happen down the road. So
I know there were some discussions on the fact that the minimum wage was only increased by 10 cents per hour, but yet unemployment assistance went up by €5 per week. You know, so again, it's
a very political budget, really, isn't it?
Absolutely.
You know, it has really no effect. I suppose the thing we want to really talk about here, we'll put the camera on, will we? Mm-hmm. Take the slide off. It is the PAYE Modernisation, which has been announced. Revenue are basically going to introduce a form of, I suppose, what we call real-time information, or RTI. The UK has had RTI since, I think it's 2012, is it?
Mm-hmm. 12-13 was the pilot year, and then 13-14 was the first full year.
So I'd imagine that Irish Revenue have been talking to HMRC about like their experience of introducing it and the problems they've had. Anyway, it's something that is planned for Ireland for the 1st of January 2019. And I know that seems like a long time away, but it's not really. It'll be here before we know it. So what we wanted to just talk about here today is, you know, what we regard maybe as some of the problems or the challenges or even the success stories of RTI. So I suppose one of the first things I was going to say was, you know, it changes how the process sort of flows. For example, in the UK, what RTI means is that when you actually process a payroll, that information is fed electronically immediately to HMRC. So, you know, when you do weekly payroll, you basically transmit a file straight away, so that they always have up-to-date information of, you know, what somebody's pay to date is, pay from various employments. And I suppose where the advantage of that is for both revenue and presumably the employee is that they're never going to reach, or they shouldn't reach, the end of a year with a large underpayment or overpayment of income tax, because revenue has such up-to-date information, they can make sure that the tax credits and cut-off points are correct as the year goes along. And I suppose it's particularly relevant where, you know, in modern society where a lot of people would have multiple employments. That is something that's very difficult at the moment under the present system to try and track or even give the correct credits for those items or for the different employments. So it's actually a big job of work on behalf of the revenue, or on the revenue's part, and hopefully they will listen to the various interested parties and accountancy bodies and software firms who have been through this already with the UK, with HMRC. We're obviously one of those software firms that have intimate experience of the introduction of RTI and the problems that it brings about. So, you know, we will also be having discussions with revenue and hoping to listen to us. You know. So I suppose, you know, this is like a panel discussion. There's no notes, there's no preparation, so we're just going to maybe throw out some ideas and what are the problems that we've seen.
Mm-hmm. Just to add that point, actually, just as a positive, really, you were just mentioning about how it would be better for employees, but also for revenue as well, to know really they'll know how much is coming in. As a,
yes.
You know, they'll have a, you know, when you do your P30 return, they will know exactly how much is due rather than estimates being made and, you know, final balances at the end of the year. So
one of the other things that they've mentioned as well is that it'll cut down on paperwork. For example, you won't need P45s anymore, you won't need the P46s. They've also stated that they reckon that P60s will be done away with. So I presume instead of, in the UK they haven't done away with P60s, but I suppose in Ireland where somebody may be going for a mortgage or something, they probably have they need their balancing statement.
Yes,
so
some kind of,
P21, sorry.
So whether they'll do away with the P6 and do something replacing it, possibly an online statement.
That's maybe a mistake.
Yeah.
I don't know, I mean, employees you would imagine would still get a P45 and a P60, even though the P45 wouldn't need to be sent to revenue.
Yeah.
You know, I mean, if it's to follow the UK model, or I can't imagine employees not needing or getting a P60.
I suppose the thing is we don't actually know what model
Well,
they're following, because I presume they've been in discussions with various other jurisdictions.
It could be a case that they kind of generated based on what's been fed to them, and you print it from their system maybe, or, you know, it's just a different statement maybe.
Mm-hmm.
It does, I suppose, though, reduce the burden at the end of the year, you know, because you don't have a P35 to send, so that kind of pressure is gone.
Yeah, it's effectively like a mini P35. It's going every 10 years.
Exactly, yeah. So I mean, there's none of that stress, I suppose, at the end of the year for, like, although P35 is very seamless, it does kind of get people, you know, they're like, oh, I have to do my P35, it's something hanging over them. But
yeah. One of the other things as well is that in the UK, that they sort of figured this out at a very early stage, that, you know, okay, what if somebody makes a mistake? You know, they need to go back and do their payroll, and they've already sent in, say, an incorrect file for a particular week or month, that they have to redo their payroll and send in another file. I think the way the UK treat it now is they just look upon the latest submission as being the most correct, and the most important thing in that submission is cumulative pay. They're not really interested in what the pay for a particular period is, but what is the cumulative to date, because that really is the most important thing anyway. Yeah. So again, like, hopefully the Irish Revenue will adopt the same sort of approach, because it'll be very difficult to work it out on what periodic pay is. Yeah. And the other thing, hopefully, as well, sorry, I know I'm talking off the top of my head here now, but even in terms of the file specification, like, I know the RTI, what they call the full payment submission, the FPS spec, is a very complete document at this stage, but it has changed over the last few years, and that it does cause some disruption when that happens. You know, they decide to add in extra fields. So hopefully, you know, again, Revenue can learn from this and come up with a very complete file specification at an early stage. It doesn't have to keep changing.
Yeah, because we're 4 years into it in the UK. And it has, I suppose, as it's evolved. You know, the mistakes were there, and hopefully now they've kind of got it tightened up to a point where, there's very few issues there.
Right, okay. In the early years, in the first couple of years, I mean, what were the main support issues, do you reckon?
I would say corrections. I think that was the majority of support calls where, again, like in the real world, mistakes do happen, payrolls need to be undone, corrections made, and it was just really communicating those changes to HMRC, especially where they belong to a previous year as well. So it was a previous tax year, somebody's pay needed to be changed. It wasn't an easy process. It still isn't an easy process, I don't believe. You know, hopefully the UK will tighten up on it, but
it's one of the things they've learned as well. They're changing what they call their EYU specification, which stands for earlier year update. Whereas up to date, that has been something that has been submitted in terms of incremental amounts, which could either be negative or positive, had to be included on that EYU. Whereas I think what they're going to be doing from now on is they're going to accept a replacement file.
Instead of just the amendment.
Yeah.
I think another area where I think maybe it causes issues for people is they miss their filing date or the filing date for filing their very final submission for the tax year. So they do only have 14 days, and we do every year have people, a lot of people, that didn't submit on time, and then it just won't go through, and that's where in the UK then an EYU comes in. So it's a return of a different manner, I suppose, but just to report the same information.
Yeah. The on or before deadline, which is basically where HMRC says that basically the FPS, which is the periodic file, must be submitted on or before the actual payment date of the payroll itself. And that's going to cause a good few issues for particularly payroll bureaus, because like I know when I was doing, when I had a payroll bureau, it was a case where my clients used to send the information into me, and like I'd basically do all the processing maybe towards the end of the month or whatever, but I wouldn't have to worry about it being fully correct until maybe they got the information out to them. Whereas now, if a client on weekly payroll, well, that file has to go in each week, so you can't just get information late, from the client.
I think especially as well for starters and leavers, like all starter and leaver information is on the returns. So we get it all the time where a client takes on a new employee, they forget to tell the person to do a payroll, or indeed where somebody has left employment. So that would be a new return, a new submission to be sent with that information.
Like I know they did have like a dispensation, whatever they want to call it, in the UK, where the first year or 2 years, or whatever, they could still send in the information at the end of the month. But I think that's finished now.
It is, it's kind of going down the route now. There's fines and penalties now if you're late. I think you get a couple of, I suppose, the lenient in a couple of
and that's another good point about fines and penalties, that there were no fines or penalties in the first year. So there were the first 2 years maybe. Whereas I don't know that Irish Revenue would be that forgiving.
Or will be revealed.
Yeah.
Do you imagine there'll be a pilot year?
Well, again, this is something that they did have in the UK, and I don't know how much uptake they. Unfortunately, if you're involved in a pilot, it means you have a lot of support issues, I suppose.
Yeah, you have to test, you're testing.
You're the guinea pig, and to some extent your customers are the guinea pigs as well. So I don't know how many, if we did go for that, how many of our customers would want to volunteer.
Take part,
I suppose another big issue that I know we've had, both from the software point of view and from the support point of view, is what they call payroll ID. And as basic, a payroll ID would be something that would enable HMRC to know whether you have the right employee. It's basically like
it's another form of identification.
Now HMRC have needed this, and I don't know whether it's something that is necessarily needed in the Irish sense, because you do have the PPS number, obviously, but then you have the address and date of birth. So I don't know whether it's something they need to go down that road or not, but it has caused enormous issues, because what can happen is, say an FPS or one of these periodic submissions has gone in, and if there's just a slight problem with the payroll ID, the assumption will be that, oh no, this is a brand new employee, it's not the same employee that was in the previous file, so therefore everything gets kind of doubled up, because we're looking at cumulatives for the same employee. They're looking at 2 sets of cumulatives for the same employee, and then they therefore assume that the employer owes this extra tax. And that has caused a lot of issues.
I suppose it happened a lot where people changed payroll software maybe midway through the tax year, so they ended up with different payroll IDs, or where somebody maybe lost their payroll file and had to rebuild it, but generally there, and then it ends up with massive reconciliation issues with HMRC.
It seems that the revenue systems in the UK can't seem to recognise it. They heavily rely on this payroll ID as opposed to looking at name, address, national insurance number as well. It just seems to be it's payroll ID takes priority, really.
Even though they have their own payroll software, which is free for small employers, and they don't use payroll IDs in it. So it is a bit of strange logic, really. But
yes, that's one of the other issues I'd be hoping to see, that it's something that maybe Irish Revenue follows the lead of HMRC is in terms of security. Like at the moment in our UK product, all you need to do initially is put in your credentials, and after that it holds those credentials, and it'll send the file through to HMRC using those credentials. It's not a case that you have to log in each time, where I don't know whether Revenue Online Service or the evolution of it to handle RTI will be able to, or will it look for, you have to enter credentials each time, because that would be a very bad user experience. So again, like, hopefully they can use the same security setup that HMRC have, which has worked very well.
Because it is very seamless, it's click a button at the end of each pay period, so I mean, it probably sounds much worse than it actually is, if they follow a similar model.
Yeah. Any other issues that you can think of?
I suppose just a negative to that, just obviously with electronic submissions, is that if the revenue systems go down, your submissions aren't going through, and of course it does happen. It happens a few times a year in the UK. Then the support calls come in, I can't get my submissions through.
Sometimes they're down and they're not accepting them, other times they're down and just the confirmation doesn't come back, but they have actually received it. But again, so there's been a few instances. But
Yeah.
Generally speaking, it's quite seamless.
I'm not seeing any questions coming through here. This is always a good
thing.
Anybody wants to sort of throw questions to the panel here?
Just about the budget in general?
Even about the RTI.
So maybe while we're just waiting to see if there's any questions coming through, the 2017 payroll is currently in development. Paul is working on it, and it will soon be going into testing, and that will include all budget changes. There's not a huge amount, but any budget changes will be included in that, and that will be available mid-December. For more webinars and courses, you can see the links there to source.ie/events and brightpay.ie/events. So maybe just wait and see if there's any questions. Nothing yet.
I suppose one of the other developments we have in the 2017 software is we've brought in what's called the Source Cloud, and basically that enables an employer to synchronize their data to the cloud so that their employees can access the pay slips, their historical pay slips, their P60s. This is something that will also evolve, because in time it will also include probably have access to their employment contracts, their company handbook, and any other documents or HR documents that the employer may want to provide or make available to the employees. The employees will be able to request changes to their details, request holidays, and there will be like an online calendar, which will be a fair bit more powerful now than the calendar that's available within the Source Payroll Manager at the moment. The other thing as well is that this, for bureaus, this is actually quite interesting, because what this will allow is then them to enable their employers to log in to view reports and get any information they need in relation to their payroll, and also have access to the employees' data as well. So it might cut down a lot on calls you might get from clients to do, I need information on such and such. They'll be able to get that information themselves. And the flip side of that as well is that if employers are doing their own payroll and they're subscribed to this cloud facility, they'll be able to grant access to their accountant to go in and get whatever reports that accountant may need when they're preparing their accounts. So it's actually it's something we're quite excited about, and as I say, it will evolve over the years. I don't know whether it'll evolve at any stage into a full cloud payroll, because it's something that I think people are probably a little bit uneasy about at the moment, but it's something we have our eye on, and that's something that is looked for by a sufficient number of people. Yes, we will do that. Okay, so do we have any questions?
One question there. How does the employee access all that information in the cloud?
Okay, well, basically through their smartphone or laptop or anything that where they have access to the web.
They'll get a link.
They'll get a link, yeah. Now we will also have an app in due course for the likes of iPhone or Android, but initially it'll be a link that they'll get that they can put a shortcut on it on their iPhone or whatever on their smart device. But yeah, no, it is available through whatever mobile device they have.
That seems to be it. There doesn't appear to be any more questions. We had allowed an hour because we had scheduled the webinar before the budget and we weren't sure, I suppose, how much there was going to be to cover.
Yeah.
No further questions.
Okay, well listen, hopefully you've learned something about, let's say, the new developments that are coming up, particularly with revenue and their PAYE, was it Modernisation?
PAYE Modernisation.
Yeah. Well, so I just see one question coming through here, I don't know.
Prepared to use PAYE return with my clients. Everybody need to bring me P45, P60 for the tax return. What document in next year bring me my
Well,
clients?
for next year, the same documents. There's no PAYE Modernisation doesn't actually happen until the 1st of January 2019, so next year and 2018 will be the same documents, P45s and P60s as it is this year. Okay, so listen, thank you everybody very much for joining us, and thank you Audrey and Vicky
Thanks,
Thanks,
Paul.
Paul.
for your
Thanks,
expertise, and thank you.